Yes, it's like a political kind of revolving door, but, in terms of what the UK assets are concerned, what's still needed to restore confidence, you think?
Yeah, I think it's important. I mean, the UK is turning into Italy or some other emerging market, maybe even beyond that in terms of the politics. But I think very important for people in markets, I believe, to say that this wasn't the markets calling for this. This budget didn't. It created a political crisis. It didn't create the markets. The markets, remember, we've had the markets have been bullied by the CTA traders. They've had a fabulous year, right? So these macro hedge funds, they've had the best year for 25 years. The traditional kind of 60-40 manager had his worst year for 25 years. So these guys have very much been in the driving seat, and they went into the end of the quarter and the end of the month heavily short sterling, heavily short pretty much everything against the dollar, actually, and also heavily short all bond markets. So they use this as their kind of get-out card. So you create mass panic and fear if you can, and then you get out the other side of the trade. And that's exactly why sterling went down for 24 hours. And the real issue with the bond market was actually because the Bank of England said we're going to do 75, and then they suddenly didn't. So the bond market spiked, and what that did was unwound a bit of a time bomb, this whole LDI thing. Again, nothing to do with the government. Yes, nothing to do with the government. We actually discovered there was hidden leverage within the pension fund system in the UK.
Interesting.
And so we created this image that this was the markets want this. Now, however this resolves itself, and we can all have our personal opinions, but nobody knows, however it resolves itself, it isn't going to be what drives the markets going forward from here about who ends up as the British Prime Minister.
Andrew Bailey, he comes out of it quite well in the end. He looked like he was the man who didn't want to do all he could to make it work.
Well, I think what you've had, I think it's important to recognise here that we've had the same economic policies in the UK for 25 years. We've had Gordon Brown's economics all the way through. It never changed. Whoever was in power...
Post-neoclassic endogenous growth theory.
Absolutely, very good. It was the... no, but essentially left of centre, large government, large tax, a lot of regulation, and it's the European model. And actually there was a small window when the UK might have delivered Singapore on terms, but they didn't. And so the powers that be, including the Bank of England, I'm sure are lined up saying, no, we don't want that change. So it was the establishment that didn't want the change of economic direction, not the markets that were voting against it. It looks to me like we are now going to shadow the EU. We're going to go down that route. So the UK will, it'll be the same as usual. Whether you think that's good or bad, it'll be the same as the EU.
Interestingly enough, you still think the UK is a good place to invest?
Well, I think...
Why?
Yes, I think one of the best pieces, most interesting pieces about the UK this week was Blackstone just saying, by the way, we see enormous amounts of value. I mean, again, I mentioned almost like an emerging market. You've had the currencies hit enormously. You've had asset prices hit. If you've got good cash flows, you've got strong balance sheets, and they are 40, 50% cheaper than they were a year ago, and you're sitting there, the most crowded trade in the world at the moment is dollar cash. How that cash gets spent, and I think the big PE guys have just pointed out, like, there's quite a lot of value here, and when they start moving, then we're going to see all sorts of drama with markets, nothing to do with politics, all to do with cash.